Hello everyone, I am Assistant Professor Misba Shaikh, associated with LJ Integrated NDA. Today, in this session, we are going to discuss and start our Module 2 of your subject Mergers and Acquisitions from Finance Specialization. Now, let us see the Module 2. Your topic for 1 of Module 2 consists of accounting, taxation and legal aspects of mergers and acquisition. It focuses on accounting for amalgamation, treatment of resultant goodwill or reserve, and tax aspects. AS14, Accounting Standard 14, defines the accounting for amalgamation as follows. According to AS14, amalgamation means pursuant of any merger according to the provision given in the Companies Act 1956 or any statute which may be applicable to the company. Amalgamation can further be classified as amalgamation in the nature of mergers and amalgamation in the nature of purchase. Now let us discuss that in detail. All the assets and liabilities are transferred while we are talking about nature of amalgamation in the nature of merger. Shareholders of the transferor company becomes the shareholders of transferee company. The consideration is discharged by the issue of equity shares in the transferee company. The business of the transferor company is intended to be carried on and no adjustments to be made to the book's value of the assets and liability sides. Amalgamation in the nature of purchase. An amalgamation which does not satisfy any of the conditions that we discussed while talking about amalgamation in the nature of merger can be considered under this head. When the asset and liabilities of the companies are acquired by another and the purchase consideration is paid by the transferee company, it is called as the purchase nature amalgamation. Now let us see the accounting methods for the amalgamation. For amalgamation in the nature of mergers, we use pooling of interest method. In this method, assets and liabilities are recorded at their existing carrying amount. The reserves of the transferor company are recorded at their existing carrying amount. Uniform set of accounting policies are adopted. The difference between the amount recorded as share capital issued and the amount of share capital of transferor company are recorded. The difference is adjusted in reserves in the financial statements of the transferee company. Now let us see the amalgamation, accounting for the amalgamation in the nature of purchase. The asset and liabilities are recorded either at existing carrying value or by allocating the consideration on the basis of fair value on the date of amalgamation. The reserves of the transferor company, other than the statutory reserves, should not be included in the financial statements of the transferee company. If the consideration is more than the net asset value of the company, then it would result into goodwill. While on the other hand, if consideration is less than net asset value, it will go under the head of capital reserves. Now let us see the treatment of goodwill under accounting. Goodwill represents a payment made in anticipation of future profits. It can be treated as an asset to be amortized to income over its useful life. It is considered to be amortized goodwill over a period not exceeding 5 years unless a longer period can be justified. In our next session, we are going to discuss tax and legal aspects of your subject mergers and acquisition. Thank you.